Good morning from London. I'm Kriti Gupta alongside Valerie, Tytel, and Oliver Crook. We're an hour away from the opening trade. Here's what you need to know. The U.S. president threatens higher tariffs on pharmaceuticals and chips, all while ramping up pressure on New Delhi to stop buying Russian oil. Meanwhile, the Swiss president takes her bid to lower levies directly to Washington in the hope of a deal that averts the 39% tariff rate imposed by the United States last week. And earnings continue from Novo Nordisk to Glencore. Plus, we speak to the CEOs of Commerzbank and Legal & General this hour. Val.
Let's check in on how these markets are faring an hour ahead of the cash equity trade in Europe. We are seeing S&P Futures rebound from yesterday's slide, nearly wiping out all of yesterday's in the red. Eurostoxx 50 futures are powering ahead. European equities have been outperforming slightly this week. They're continuing that trend this morning. Eurodollar is really where it started this week at 115.80. Not a lot happening in FX space. We're continuing to see U.S. yields creep higher. Remember, the lows this week on that U.S. 10-year yield were 4.18. We do have a 10-year auction later tonight. The countdown to the opening trade starts right now.
Happy Wednesday. Halfway through the week, but no shortage of news, even as we do see a little bit light volume, a little bit low liquidity on this month of August, I should say. But that tariff news does still come in very, very hot. Remember, we're in the middle of earnings season. We're in the middle of trying to think about monetary policy around the world. But Donald Trump takes no reprieve. In fact, in the last 24 hours, making a lot of interesting comments. First, talking about sectoral tariffs, pharmaceuticals, chips back on the agenda. Nothing he hasn't threatened before, but suddenly the upside on the pharmaceuticals goes from 200% to 250% in the next year. He's also really ramping up the pressure when it comes to India as he comes up against that 10 to 12 day kind of deadline that he had with Russia. Lots going on in the geopolitics and tariffs being used as a tool to navigate that.
Yeah, and I thought the interesting thing from this CNBC interview that Trump had earlier yesterday, and then when he spoke to the press after that, he mentioned that these pharma tariffs are something that are going to ramp up over time. And that's how he mentioned, or that's how he got to the 250%. I think it's a very interesting thing. That was something that was floated by the administration at the very beginning of the tariff agenda, this idea that tariffs could incrementally increase. And I bet that's going to worry some of these trading relationships, these deals that have already been set, when he's already talking about ramping up tariffs across the years. That could be something that maybe could spook a country like Switzerland, for example.
Absolutely, because when the cabinet came out last week, they were talking with Howard Lutnick, Scott Bessent. They were talking about, these are going to have the rates set in stone on Friday. We're going to have clarity on tariffs. That is going to make our allies more comfortable. It's going to make companies more comfortable. That is quite visibly not the case, and that is sort of why we've put together, the sort of the art of the deadline, because to actually try to put quantifying when these actual deadlines are on Friday. Well, actually, today we're going to get the news on India. Friday, it's that secondary sanctions on Russia. The end of the week, we'll have a new Fed governor, theoretically. He also said maybe a chair, though I suspect that is not so. In a week or so, we'll hear more about those pharma and chips. And, of course, we have a state visit now, uninvited, the Swiss president in Washington, D.C., who is meeting with Marco Rubio, who is, of course, not in charge of trade policy, but she's there trying to get that tariff down.
It's fascinating that we're uninvited, getting Marco Rubio, who I think is third or fourth in charge in terms of the high-profile folks. But is this a strategy that works when we're talking about Switzerland, really trying to pull down 39%? At the end of the day, when pharmaceuticals are a carve-out of those negotiations anyway, and we're still looking at those massive numbers.
Yeah, well, it seems like the phone call that took place just didn't work for Switzerland, so maybe they're hoping that a face-to-face meeting in some way will have some key breakthroughs. We know that Trump has talked about, meeting leaders face-to-face is helping them understand each other, but it's very clear from Trump that he wants these pharmaceuticals made in the U.S., and I don't think that's what Switzerland wants to hear.
Yeah, there was a suggestion potentially of a gift, either investment in the United States, maybe a gold watch from Switzerland was one of the things that was posited.
That'll do it. Maybe a gold watch with a side of fondue or something.
A lot of marble.
Yeah.
We know he likes that. But let's move on to some earnings that we've had this morning. We have heard just recently at the top of this hour from Glencore, the commodity Swiss powerhouse. I guess we can attach it to the Swiss word of the day. But they're listed in London. Investors have been on the lookout for more details of the cost-cutting announcement that they made last week. They said that they want to cut $1 billion from costs. They raised their long-term profit forecast, but did not not really provide or identify where the cost reductions would be achieved. It doesn't look like we're getting that. We might have to wait for the analyst call for more color on that, but it does look like the first half adjusted EBITDA coming in slightly below expectations. Maybe that's the reason why they did announce these cost-cutting measures last week.
Yeah, and it's a competitive day for our attention in terms of earnings this morning. And before we get into the banking sector, just to go through, so what we've seen from the pharma sector, Novo Nordisk, sales broadly in line with estimates from what we saw. There was a slight EBIT miss. What I think is interesting, what the market is focused on, is the sales of Wegovy, the sales of Ozempic. When we look at what we got versus what the expectations were, Ozempic down 2.5% versus expectations. Wegovy up ever so slightly. Total revenue about 2% miss. What we saw for Bayer, much more of a sort of mixed bag, because out there, obviously, the slightly higher outlook. What they cannot get past are these litigation costs coming in at 1.7 billion euros, and that all has to do with that litigation around Roundup and glyphosate.
Yeah, you're not exactly seeing a ton of reprise when it comes to Novo Nordisk stock as well. And given that it's one of our core six and one of the mega weights here in Europe, not exactly good news. The ADRs got crushed in yesterday's trading session over in the States. Let's talk about the banking sector, though, as promised, because, of course, Commerzbank is in the news this morning with some massive beats when it comes to their profit numbers. Their net income coming in stronger. They're also announcing a 1 billion euro share buyback. And this is, of course, topping, by the way, a record quarter in their history. Also talking about full year guidance that comes improved on their net income front. Lots of good news when it comes to this set of results and really that profitability story that the CEO, Bettina Orlopp, has been on. Let's bring the CEO in right now for a conversation on some of these numbers. I'm pleased to say Commerzbank CEO Bettina Orlopp, as promised, joins the program. Thank you so much for your time this morning. Bettina, let's talk about these numbers here. I mean, these are massive beats. I want to go into the buybacks, though, because this is also a massive return to shareholders when it comes to that 1 billion euro buyback. Is this the new precedent when it comes to returning value to shareholders?
Yeah, I mean, it has been really a record half-year result. The operating result of 2.4 billion is the best ever in the history of Commerzbank, and that is driven by very strong revenues, very good cost discipline, normal risk result, and that leads to this return on tangible equity of 11% before restructuring costs, which is very coming close to cost of capital. And that gives us the confidence to also apply for the first tranche, I have to say, of the next share buyback up to 1 billion euros. And we always said that we are committed to capital return and that we would, for this year, return 100% of our net income after 81, but before restructuring costs to our shareholders. And that's the beginning, basically. And given that we were even able to increase our outlook, it's very good news, I think, for our shareholders.
Good news across the board, certainly, Bettina. I think if there's one place of concern when it comes to these beats across the board, there is a small marginal miss when it comes to the CET1 ratio. There was an estimate for the second quarter about 14.9%. You guys have reported 14.6% today. I'm curious, at the pace of returns and the pace of payouts, do you think that eats into that capital buffer ratio? Just walk us through whether you can keep that pace at the expense of that cushion.
Yeah, I mean, the reduction of the CET1 ratio is due to basically three factors. One factor is just we have an increase on RWA, which is good because it's linked to our revenue increase and the loan growth of on the corporate client side. That's number one. Number two is clearly that we do not take into account any of our net income because we want to have an 100% payout, and we have excluded also the restructuring costs from that, which means that this is also has an effect on the CET1 ratio. But this is why we also always guide for the 14.5% till the end of the year. The restructuring booking has taken place now in Q2. Nothing more really fundamental to be expected. So we basically stick to our guidance. So no surprise. It's just due to the fact that we had in the second quarter the booking of the restructuring costs. And that was always planned. And the third factor is a little bit of FX effects, etc., which always play a role.
And Bettina, I'd like to get a little bit into your appraisal of the outlook going forward. There is a very possibly bullish story to tell about Germany with the government spending, with the sort of reforms. That has been held back on the corporate side by the massive uncertainty we had with tariffs. Do we now have certainty with tariffs? And are you going to see a lot more activity coming from the sidelines in Germany?
I mean, we see that already in the sentiment. If you look on the IFO data, which has improved for the 5th time now in July, so you see positive momentum, and we also see that when talking to specifically medium-sized corporates who have been rather cautious and hesitant, and they are really working on their investment plans. Whether it's the 3rd quarter or the 4th quarter where they start moving, we will see. But there's clearly a lot of positive momentum in place, also due to the fact that the government has basically also launched some first measures with respect to energy costs, with respect to tax reliefs, with respect to depreciation rules. And that combined with the stimulus package is clearly a good mix.
And I'd also like to get an update of your conversations with UniCredit. They've now increased fully their stake to 20%. We're now approaching, 30% in terms of derivatives and other things that they can take possession of Commerzbank. Are your conversations with Andrea Orchel, are they regular? Can you express to us kind of the tenor there? What is that relationship looking like as of today?
UniCredit is for us an investor, a large investor apparently, but it's an investor. So we have investor talks, and that is on a regular basis, as we have with other investors basically every quarter. Besides that, we stay fully focused on the implementation of our momentum strategy, which is a standalone strategy. I mean, we took note of the situation. It's a difficult situation, I have to say, because it is not usual that you have a key competitor who's also a large shareholder.
And in terms of defending yourself against that sort of takeover, your share price is up 156% since that stake was originally announced by UniCredit. Is your technique here to get too expensive to buy?
Well, actually, I think we are pretty expensive to buy. And if you follow on the comments of UniCredit, I think they made it also very clear that a deal currently is not really value accretive. And clearly, our objective is to create value for our stakeholders, specifically our shareholders, and to maximize the value. And if you also see what happens to our target price, it's not only our share price, but also the target price of analysts have moved up continuously. And we indeed intend to continue the story and just focus on delivery.
Hi, Bettina. It's Valerie. You mentioned there creating value for shareholders. Is acquisitions something that you're looking at in order to create that value? You've repeatedly said that you're looking for relatively small acquisitions, but little has happened. Are there any fresh developments on that front?
No, I mean, we continuously keep looking, and it's, as you said, it's more smaller acquisitions, but we also always said that they need to fit our requirements. We have very clear targets out there. A return on tangible equity of 15% up to 2028, and also 50% cost-income ratio. So we need to be cautious. Whatever we do as acquisition needs to help us on this path, and that's the threshold every acquisition needs to take.
And last question from me. We've recently had a theme piece on the terminal talking about bank CEOs saying that customers are shying away from U.S. banks and wanting to diversify their relationships. Are you seeing that kind of move away, maybe diversifying more into European banks among clients?
I couldn't tell that this is really a trend we observe. I mean, we have our core clients who are very loyal to us, and you see that also in the latest awards we got in Germany. But besides that, I do not see these movements.
Well, Bettina, just a final question on that follow-up from the United States. There's also a question here of whether there's evidence of a de-dollarization theme that's showing up in this trade. Are you seeing any evidence of that?
No, I mean, we are anyhow not so much opposed to US dollar, so probably that is something other banks can judge better. But I mean, there's clearly cautious behavior with respect to investment in the US in the moment. There's kind of a wait and see how things are developing. But besides that, no big movements, at least not for our business model and for our clients.
All right, Bettina Orlopp, the CEO of Commerzbank, joining us this morning. We really appreciate your time. Thank you for joining us. Coming up on the program, we're going to stick with the European story. The Swiss president is in Washington working to lower the 39% tariff imposed last week by Donald Trump. More on what's at stake coming up throughout the program. Plus, Novo Nordisk missing estimates. We'll check on the share move in this turbulent time for the drug maker and one of the heavyweights right here in Europe. But up next, we go right back to the earnings story. The Legal & General CEO will be joining us after his company's latest earnings print. Excited for that conversation. If you have any questions for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Good Wednesday morning and welcome to Opening Trade on a very busy day for earnings season here. We also have the numbers from Legal & General with a first half operating profit that beat expectations, coming in 109 million pounds with the estimate of 174, and the first half core operating earnings per share up 9%. And we're very pleased to be joined by the Chief Executive Officer of Legal & General, Antonio Simoes. Thank you so much for joining us. If you could just give us quickly an overview of the quarter, but I'm more interested in casting our sort of minds forward and how difficult it is to outlook the year 2025.
Well, thank you. First, thank you for having me this morning, Oliver. So, yes, as you've just said, excellent numbers. We sort of beat analyst consensus, and particularly that sort of 9% core EPS up. We have a range of 6 to 9%, so right at the top end of the range. Second, the strategy is working. I took over last year and announced a new strategy. So we have sharper strategic focus. We've done a series of disposals, including our U.S. protection business. We sold it to Meiji Yasuda, the Japanese. Series of acquisitions, and just last month we announced an exciting new partnership with Blackstone. To your point, in terms of outlook, look, I'm pretty confident. Of course, you've just been talking about it this morning, complex geopolitical and economic environment, but we are on track to beat our 3-year targets, returning more than $5 billion to shareholders. So I'm feeling pretty good about the immediate performance, but also the long-term strategic growth prospects.
And your business is one of risk and risk management. And one of the things that people are very concerned about is potentially de-risking to the United States, moving potentially to other places like Europe. How is that playing into your strategy? How do you think about risk?
So we are a global player. So our biggest market is the UK, and we feel good about our strong capital position. This morning I'm announcing a 217% solvency ratio. So in insurance, that's a good thing. The US is our second biggest market, and we are a global asset manager. So when I think about geopolitics, I think about more than, at the moment, 44% of my AUM is outside the UK. And we feel really, really positive about the risk management of our different areas.
Antonio, I want to ask you a question about the competitive landscape of insurance in the UK. You've recently seen Apollo and Brookfield's insurance arms have bought UK insurers, and they're getting involved in the pension transfer business. How do you view that threat to your business, your main business, should I say?
Look, we feel pretty confident, actually. So it's good to have a healthy market. So and actually, in many ways, I think about it, Valerie, the other way around, which is this is a really attractive market. I've talked about $1 trillion of pension risk transfer over the next 10 years and probably another $1 trillion after that globally. So having competitors, sophisticated investors coming into the UK validates the market where we are the leader. So we've been doing this for 35 years in the UK. We have the largest asset manager in the UK, and I just mentioned the partnership with Blackstone. That gives us additional competitive advantage as we originate assets ourselves, but also assets from Blackstone.
And on UK pensions, we've seen some discussion by the government of mandating UK investments in UK pensions. What do you make of that? Does that change the landscape of your business at all if that mandate comes along? Is that something you support?
So we support the direction of investing in the UK, both for savers and for the economy. But the way I think about it is we have to have the supply side reforms to have the right projects to be able to invest in the UK. With our signature, you probably know this, the Mansion House Accord, just around the corner from Bloomberg. And we want 15% of the defined contribution pots that we have to be invested in private markets. A big part of that is in the UK. So we believe that those incentives do not necessitate mandation. So actually what we like is to have the right opportunities, and we have a fiduciary responsibility to deliver the right returns for our savers.
We've done a lot since you've taken over from Nigel Wilson in your, what, year and a half?
Yes, year and a half,
Since you've been about, you sold Kala, you've sold your U.S. insurance business, you talked about the partnership with Blackstone. What's coming up next? What's the next radical thing you're doing?
Yes, I'll tell you here. Just
give me all the goss, all the details.
No, but actually, you're right. We've been incredibly busy. It's been all about executing the strategy that I announced last year in June. So we talked about a growing, simpler, better connected LNG that becomes more capital light. A big focus, Kriti, has been asset management. I really want to grow our asset management business. We're the largest in the UK, but that's not enough. So a lot of the acquisitions I've done, so Proprium Capital Partners, they're a great company in continental Europe and Asia, Taurus in the US, so all of a sudden I have a global real estate equity platform, and I particularly want to grow private markets. You'll see this morning in the numbers, we now have 65 billion of private markets. I want to exceed 85 billion, so you can see more in that space, more to come.
So private markets, all these acquisitions, just M&A, even divestments, those all should, in theory, show up in your share price. You haven't seen much of that. What's your theory? What's going on there?
Look, I'm here for the long term. This is about executing the strategy for the long term. But if you look year to date...
Some would say 18 months is a lot of time.
It is, I know. But over the last... I know, I'm impatient. But over the last year, the share price is up 22%. We also have a very high dividend yield, 8.5%. So actually, the total shareholder return over the last year is more than 30%. But Kriti, this is for the long term, right? A year and a half, I'm impatient. I want to deliver the right returns. I've talked about returning more than 5 billion to, in the previous piece you were talking about share buybacks. We're returning 5 billion in 25, 26, and 27 in 3 years. So I hope that gets reflected in the share price.
That's a lot of energy, a lot of confidence moving forward at a time when so many of your peers, I think, are hesitating. They're stopping business investment. They're waiting to see what policy out of Washington looks like. Are you seeing that in some of your clients and some of your moves? How are you positioning, coming back to what Ollie's question was at the start, for that uncertainty? How does that hinder what you're trying to do?
Look, this is a really long-term business, right? So if you think about the pension risk transfer business we were talking about, that's really, we're paying pensions for the next 40 to 50 years. So we really think about it in that time frame. So in that sense, our clients are pretty confident. Companies like LNG buying their pension schemes and us paying them for the next few decades. Asset management, really long-term business. So I am cautious about the environment, but I'm really optimistic about our own prospects.
And I think that the situation with the United States, the geopolitics, has exposed the degree to which in Europe we need broad European champions. You're a very large player here in Europe. To what degree are you taking advantage of that? But also, to what degree does it make it more difficult with the UK moving away from the EU at a time when you're talking more and more about a capital markets union, much more financial synergies within the European Union?
So I like this idea of we are a very strong UK player with the largest asset manager in the UK, certainly the largest in the pension risk transfer business, and I think that can be an advantage for us. We have a global footprint, but the fact that right now, I think from a UK perspective, talking to Kriti's point earlier, we see investors wanting to invest in LNG as a company. When I go to the US, when I travel around the world, I see pent-up investment demand in the UK, and hopefully LNG will be a sort of beneficiary of that.
All right. Antonio Simoes, Chief Executive Officer of Legal & General, joining the program today, talking just a little bit about everything. I think we covered almost every angle in that interview. We thank you so much for your time. Coming up on the program, we're going to go right back to what I think is one of our top stories this morning. And earnings have really overshadowed it, but the Swiss president is in Washington, a Hail Mary effort to lower the 39% tariff rate imposed last week by Donald Trump. Is she successful? What is she there to offer? And turns out she's not even meeting with the U.S. president. She's meeting with Marco Rubio. More on what's at stake coming up next. This is Bloomberg. Minutes away from the start of the opening trade. When you look at the futures picture, remember there's a lot to digest here when it comes to the earnings story, when it comes to the geopolitical risk, but also light volume, light liquidity. Green on the screen across the board, almost all identical, higher by about 0.5% across the board.
Let's get a check in on the bond market, see where pricing is shaping up this morning. I think there's a slight bit, ever so slight bit of selling across the 10-year complex here in Europe and Germany, France, and Italy. You can see it there on the screen. Yields hedging up ever so slightly, but really, more or less flat today, Val.
Absolutely. The U.S. president, in the meantime, as one of our top stories, says he will pick a new Fed governor this week to replace Adriana Kugler, who announced her resignation on Friday. Donald Trump also revealing that there are now 4 people in the running to replace Chair Jerome Powell.
Fed governor, I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. Everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
4 people. Who could they be? Valerie Tytel here with all the answers. Val.
A lot of speculation on just these 2 mystery candidates. He talked about the 2 Kevins in his interview with CNBC, that being Kevin Warsh, the former Fed governor, and Kevin Hassett, who is his longtime economic ally. When he did talk about Kevin Warsh to CNBC, he said that he is a good candidate, but there's question marks about his loyalty once he gets in the seat. Kevin Hassett does remain, at least in Bloomberg Economics' mind, the key frontrunner for this seat. But there are 2 wild cards now that Scott Bessent is no longer wanting to be considered for Fed chair. He is happy at the Treasury. And I think this is one main risk for the market this week. A wild card pick could really spook the markets. We know it's a low liquidity August type of week. A kind of surprise like that might jolt the markets. But we also need to keep an eye on the economic data that jolted the markets yesterday. We had ISM services coming in below expectation, getting very close to contraction. And if you actually look at the employment subcomponent that seemed to worry the equity market, it fell into contraction. It was actually one of the lowest prints for that employment sub-index since the pandemic. So still worries about the labor market are front of mind for the market. There was not a lot of change, at least on the Fed pricing. The cuts priced in for September still remain around a 90% odds, but the equity market did not like this ISM services PMI yesterday. Erased a lot of its early gains. It fell actually 0.6% after the back of this release. So the equity market keeps rethinking what it means, what this economic data means, while the bond market is pretty sure about that September rate cut. Kriti.
It's a fascinating one. We'll see how this all shows up, or if people are even paying attention to all of this. I know Valerie Tytel is, but how does this reflect in this August market? That is something to see. In the meantime, we should go right back to the geopolitics, because that is something we are likely to see reflected, at least here in Europe and at least in the Swiss market. Swiss President Karen Keller-Sutter arriving in Washington yesterday to make a last-minute bid to improve the 39% tariff deal. For more on the latest, what's going on in Zurich and in Washington, Bloomberg's Paula Denecki joins us from Zurich. Paula, can you just walk us through what she hopes to achieve and what she could potentially offer?
Hello, this is Paula in Zurich. So she really hopes to avert the 39% tariff rate to hit on Thursday that was announced last Friday in a surprise to Switzerland. She came to Washington without having meetings set up beforehand, but we have learned in the meantime that she is going to meet Marco Rubio today at 10:15 Washington time. So yeah, we really have to see what will come out of that meeting. It is a little bit unclear what she really can offer at this point. There are several things under discussion. One is like more investment programs from companies, but we are not sure where this could come from at this very moment. Other things that are under discussion are investments, or like Switzerland buying more energy and weapons from the US, or changing something about its gold refinery and agriculture tariffs. So this is what we will see. Yeah.
What we tend to see in the tariff negotiations is everyone is focused on Donald Trump in the negotiation. Once a deal is struck, the domestic audience starts to have a few problems. What are the domestic issues for the president now in her conversation with Donald Trump, and what she could potentially give up and the problems that could cause at home?
I mean, the 39% that Donald Trump announced was definitely seen as a loss for Switzerland, and people are very unhappy in Switzerland with that deal. So there definitely is the expectations that she brings home something better than that, while at the same time anything that Switzerland could offer, especially in terms of buying more energy or buying more even more expensive weapons, would land hard with people in Switzerland. Yeah.
Paula, you talked about how that 39% tariff rate came as a shock to the Swiss. Are we hearing anything directly from business leaders talking about this high tariff rate and how it would affect them directly?
They are very different voices. While many companies on the Swiss SMI have an international business model, including production in other countries than Switzerland, so they are not directly affected, while there are companies which are highly affected, which is, for example, the watch industry. They pride themselves for watches made in Switzerland, so it is not easy for them to shift production elsewhere. And we heard the Breitling CEO yesterday coming out blaming the pharma industry for causing this situation. So at the same time, some businesses are adjusting already. We heard from the Ypsomed, a medtech company, that they are shifting production to Germany, and at the same time being faster in setting up their production facilities in the US. So playing by the book that Trump has written for them.
All right, thank you for joining us. That was Paula Denecki from Zurich on the latest on the Swiss president going to the U.S. to meet Marco Rubio. But we have more on the docket today that we're watching.
That's right. That's only one of the things we're looking forward to. We're also looking for Euro area retail sales. That'll be at about 10 a.m. UK time. Also a 10-year auction over in the United States. Closely watched with the 30-year coming tomorrow. And then, of course, earnings out of the United States. Disney, Uber, Airbnb. And, of course, we can't go without talking about the Fed speak for the day. Cook, Collins, Daly, all speaking throughout the day today later.
And at the Anchorage Summit event. We should be sending someone to Alaska, I think, to be covering all of this.
I think Odd Lots is going.
To Alaska?
Yeah.
Oh, yeah. I did not know that. No, it's a fascinating one as well. But this is, I think what speaks to your hit earlier as well, which is simply this idea of who those question mark faces actually are, because it's quite clear how we know about the other Kevins. They're fairly dovish. We know that is something that the markets are not only pricing in for this year, but certainly going into next year as well. What could those wild cards be? Just like theorize for a moment.
Well, there was one that was talked about. Her name is Judy Shelton, who's been an economic advisor to Trump, and she's actually been on Steve Bannon's War Room podcast, which is kind of the way that Scott Bessent got Trump's attention. He was a regular appearance on that podcast too, so kind of from the hardcore MAGA side. But she is basically a gold bug. She is very critical of monetary policy and the Federal Reserve, so maybe that's why she's getting some attention. But I'm not sure she's the toughest candidate that Trump would want in that guys.
It's fascinating when you're comparing kind of what's going on in the States and this very sudden, I think, dovish pivot that's now kind of realized in these markets relative to what's happening in Europe. We have an S&P that's now at zero and is contemplating potentially negative rates. We have an ECB that is markedly dovish. We have a BOE that's hawkish, sort of, on the border, kind of potentially. Now, does that make suddenly Europe more or less competitive?
Well, I think the problem with the Europeans is that ever since Trump took over, everything is in wait-and-see mode. They're dancing to the sort of tune from Washington, D.C. and just waiting to see kind of what happens. The sort of advantage that they have from the rate perspective is that they began their cycle before. They managed to bring rates down, and that is still not really done anything in terms of weakening the euro. So, again, all sort of orthodoxy and convention, this is a new world for monetary policy and certainly the FX market.
I felt like it was such an easy concoction to make, this idea that you do monetary policy based on what Donald Trump does, right? If it's a higher tariff rate, it's very easy then to kind of monitor that out. The uncertainty is the problem and where you get the dovish tilt from. I think the fascinating bit is that one of the U.S.'s big appeals right now when everyone's trying to get away exposure is that AI innovation theme and the tech theme as well. And I think that's where I want to go next with some of the stories from that tech universe and the exposure there. Shares of Supermicro, for example, not having such a great moment in the sun, plummeting in extended trading after the company lowered its revenue forecast and projected a quarterly profit that fell short of estimates. Now, Supermicro shares have surged a whopping 88% this year on AI optimism, but the revised outlook is raising questions about sales and pricing pressures. In the meantime, sticking with that doom and gloom in the tech space, shares of AMD also fell in late trading in the States after the second largest maker of AI processors warned its return to the Chinese market is still a work in progress. The U.S. curbs on chip sales to China were relaxed last month, but AMD says its export licenses are still under review. The update overshadowed a generally upbeat forecast for its AI business. And Bloomberg has learned that OpenAI is in early talks for a secondary share sale that could value the company at around $500 billion. Sources saying investors, including Thrive Capital, are looking to buy shares from current and former employees. And I think this is really highlighting, again, this idea that on the one hand, you have this earnings volatility, this geopolitics that kind of hangs over the chip sector. But then you look at that AI optimism, and it's still green on the screen there.
Well, I thought it was funny about this OpenAI secondary share offering. We know that Meta has been poaching a lot of their AI researchers and possibly giving its employees a route to cash out is something that they're seeing as now a viable reason to do this share offering and to keep those employees on deck. I know that Sam Altman has talked a lot about how the employees at OpenAI like OpenAI's mission. They're there for the long-term picture, but sometimes you need some cash in your pocket in order to stay in that seat.
Yeah, but also some massive shifts over at OpenAI. I mean, we have Sam Altman, yesterday, the company coming out saying that they're going to do sort of open source AI, which is how they began the thing. They brought it in, they closed it. I mean, it's called OpenAI. They moved away from that. And then Sam Altman saying that basically they were on the wrong side of history of that is a major shift from the leader of that company. And I think for the chip makers, aside from just the pure AI plays, the AMD China squeeze, I think is a very interesting story because we have the same thing. We heard it from Infineon yesterday, right? They sell most of their chips into cars, into EVs. Where is the biggest EV market? It's in China. If you comply to U.S. directives to track chips and upset China, you get caught right in the middle of those two giants.
Yeah, and it's interesting that maybe NVIDIA is a bit more positive about getting those export licenses for their H20 chips, but not all chip makers, especially AMD, the second largest chip maker, share in that kind of excitement and optimism about those export licenses.
And that's going to be something that's a key topic in terms of those negotiations between the United States and China. Coming up on the program, we're going to continue the conversation on tariffs, but with a different kind of sectoral view instead of a country one. U.S. President Trump threatening those tariffs on semiconductors and pharmaceutical imports. He says they are coming soon. We take a look at those and your other stocks to watch next. This is Bloomberg. Just under 15 minutes from the opening trades across Europe, futures decidedly higher by about 0.5% and gaining as we speak. But there is one story that we need to give a little bit more attention to. Threats coming from Donald Trump when it comes to India in hopes to gain a little bit more pressure when it comes to New Delhi's purchases of Russian oil. At the moment, we are hearing a live press conference from the Reserve Bank of India. This is Sanjay Malhotra, the governor there, I should say, talking at the monetary policy briefing. Already he's fielding those questions on that tariff threat and what it means for the inflationary story out of one of the largest economies in the world, certainly the most populated. Right off the bat, he said it's very difficult to predict the impact of global uncertainty, that they don't have enough data to revise their GDP forecast. But of course, really reiterating what I think a lot of world leaders are talking about, which is this uncertainty story when it comes to pricing in the tariff impact on that monetary policy. And really, he's having to defend the fact that at the end of the day, they did not change rates, even as a defensive kind of move in terms of the policies out of Washington. Joining us now for a little bit more insight on this very topic is Marcus Live Executive Editor Mark Cudmore. You were visiting us from Asia, close enough. Talk to us a little bit about this kind of thinking here, because it's not just India that's facing this. There's a lot of folks in the EM space, Brazil, Mexico, among others, that now have to position their monetary policy with respect to expectations on the trade front. How do you position for that?
I think just like companies, they're going to wait as long as possible to react, just like the Fed is doing as well. So I think one of the themes that many people got wrong, including myself earlier this year, is that we thought at some point there'd be a binary tipping point for when tariffs would impact. Because of the stop-start policy of Trump's approach to trade, and it constantly changing. In fact, from a company point of view, you don't want to change your prices or react to tariffs until you're sure it's a new sustainable equilibrium, which we've still not hit yet, which means that everyone's kind of delaying. And because these tariffs were so well flagged, people front-loaded them in terms of supply chains. And it's the same from the economy point of view. We still don't know what the lasting level of tariffs are in any country. India is probably particularly in that point of view because they're in the firing line right now. But everyone's assuming they're going to negotiate a slightly better deal, which means how can you react at all yet to when you've got no idea what the impact will be?
In terms of drivers looking forward, we've got this sort of art of the deadline from Donald Trump. We're going to get that India thing later today. They say he's going to give the tariffs there. Then by Friday, we should get secondary sanctions potentially on Russia. We look ahead to next week for a potential new Fed governor, pharmaceutical chip tariffs, and then, of course, the trade truce between China and the United States expires next week. What for you is the most significant?
I think that the main takeaway is this is not ending. All these deadlines are all fake.
Right.
I mean, in terms of that, it's going to be a continuing rolling issue. And I think because Donald Trump has flagged that he'll use tariffs for geopolitical goals and not just on trade policy, we can't expect a perfectly sustainable equilibrium. What we need to do is we need to know at what point are we kind of close enough to the end game. And I think we are getting closer to that point. So it's not any one deadline, because no one takes any of these deadlines seriously. No one takes any final rate of seriousness. But I think people are going to start working out who are the rough winners and losers in this new world. And it seems like India is one of the losers.
Okay, when it comes to one of the deadlines, the governor pick, I mean, he probably is going to make it often. The seat is going to be vacant as of August 8th, which is 2 days away. Do you think that there's a risk that there might be some wild card candidate that no one's talked about that sits down and that spooks the market in this low liquidity August type of environment?
Obviously, that's a risk. But I would say that everyone's going to assume that any candidate that's going to be picked is going to back Trump's Fed cuts. So we're just expecting a dovish candidate. So I think it's going to be hard to spook the market in that regard. It's not like we're going to suddenly get a hawkish candidate. Warsh is the most obvious candidate because he's available at the moment. He's the favorite in the betting. He's going to be dovish. That would be. So I think anyone who's in line with that was expected to support rate cuts immediately won't spook the market. Now, if it's Hassett, I think we get an even more dovish outcome with potentially an aggressive kind of twist steepener in the curve. So I think that's the kind of secondary risk. Yeah, of course there could be some kind of tail risk candidate, but I think it's important that a tail risk candidate won't spook the market. It just leaves the market a little bit confused, but we get the same reaction. If it is Warsh, any dip in yields won't sustain because it's expected.
Well, talking about a dip in yields, we've had a massive one, last Friday. We have these treasury auctions this week. Do you expect good demand? Are you seeing that as an indicator at all now for this worries about fiscal sustainability? I mean, we had a laser focus on the treasury auctions that seems to have dissipated. Is that something you're focused on at all?
Yeah. I never understood quite why we got such a level of focus on the auctions. It's not like we ever warranted a complete panic on treasuries just yet. I think people are probably reading too much into the marginal message. And I think even though we've got a big auctions schedule, people shouldn't care too much about this. Of course, I think it's just because we're in quiet summer markets, people are going to get excited. They got to look for something as a catalyst out there, something to get inspired by. And of course, it's the direction that we're worried about. This is not because fiscal concerns in the US have gone away, but they're a really slow-moving story. And there's no reason for a sudden halt from foreign investment into treasuries just yet, which is what people are ultimately worried about.
All right. Bloomberg's Markets Live executive editor Mark Cudmore joining us for his 3 minutes, plus a little extra for a little bit of analysis on the world. You get more analysis from him and the team. MLIV Go is the function on your terminals. Go from the macro to the micro and get our stocks to watch with Louise Moon. Louise.
Good morning, Kriti. So the first key sector that we're really looking at this morning is chip stocks over in Europe. There's been a host of news out overnight. So on the back of earnings and on tariffs, two key earnings in the US saw shares plummet in relation to that industry. So we're really seeing if this is going to weigh into Europe and weigh on stocks this morning. So some key ones we're looking at is ASML, SAP, Infineon. As you can see, it's been a bit of a mixed picture for the industry so far this year. So we'll have to see how this feeds through into the chip stocks in Europe this morning. This is also related to tariffs in relation to Trump's announcements overnight. He said that chip levies could come within the next few weeks. So there's a bit of uncertainty there, as you have been speaking about. And also related to that is pharma, the pharmaceutical industry. Trump said that these tariffs will start off a bit small, but they could go up to 150%, 250%. He said that yesterday. So that could also weigh on the sector this morning. A key company that we're looking at within that sector is Novo, listed in Denmark. They've had a rough year to date so far, and they had their earnings this morning. Some more bad news for them. Sales coming in very weak, so you'd expect that to weigh on their stock this morning. And then the third sector that we're really looking at is banking. So we've had two key banking earnings this morning in Europe. We've had Commerzbank and ABN AMRO. Both announced big buybacks. Commerzbank 1 billion euros and ABN 250 million euros. That's on the back of they beat expectations this morning. Earnings came in strong, so you expect that to really boost their stock this morning.
All right, our equities reporter, Louise Moon, walking us through some of those early potential movers. We thank you so much. She was hitting it there, though. We got plenty of earnings to digest. Lots going on. There's one that specifically caught our eye over here that I don't think we've given enough love to, that maybe we will, and that's Glencore. Forget the earnings for a second, which, look, they're fine. I think the more exciting one is the CEO saying that it's not value accretive to leave London right now.
And this was a theme in some of the conversations we had yesterday with BP. There's a new chairman there who one of the ways that he managed to juice up the valuation over at CRH was to move the listing from London to the United States. And of course, in a political climate where Donald Trump is sort of picking winners and losers in the corporate world, that is something that could potentially be much more attractive in this particular moment.
Yeah, small win for the FTSE this morning. Maybe we can declare that Glencore is not very interested in New York.
Not very interested in New York. But when it comes to the earnings picture, I mean, look, there's plenty to go around this morning. Luis there was talking about Novo Nordisk taking a little bit of a hit. We know that's been a stock that's really taken a beating. We, of course, have the banking stocks to mention.
Commerzbank, I'm really struggling to find any bad news in these earnings and these figures. Maybe that's my German bias coming in here, but I mean, it's a beat really across the board. A beat even on provisions for loan losses that came out across, and then $1 billion in buybacks. I mean, at a moment when they're kind of under a siege by UniCredit, but really a very positive story for Bettina Orlopp this morning. Again, up 156% since Orchel bought the stake.
Yeah, and she mentioned there that was the first tranche of the buyback. Yeah. Maybe some sort of a premonition that there is going to be more to come if they do get that okay from the ECB to release that cash back to shareholders.
Yeah, it's fascinating. And stick with the German story. We haven't really mentioned Siemens Energy just yet, but I believe our very own Lizzie Burden spoke to them in the last hour. They're hitting the top of their guidance. They're saying the U.S. demand story is strong.
And when you go into these earnings seasons with really elevated valuations, we're impressed by Commerzbank. Siemens Energy up 300% in the last
trade,
year.
Right?
I mean, unbelievable.
We'll see how those earnings reflect at the open. In the meantime, the futures picture, green on the screen, but light volume, light liquidity. That's a theme that we've seen all week long, and it's a theme that I imagine we'll see all month long. Does it sustain into the open? That's 5 minutes away. Stick with us. This is Bloomberg. A few minutes to go until the opening trade. As we go into that light volume, light liquidity session, I imagine it's worth taking a look at how we spent the last 24 hours in these markets. Now, Europe I started here 24 hours ago getting ready for a positive session, and that is kind of what we got for the majority of the European session until the close, and that's where we went negative. Perhaps that sets us up nicely for a little bit of a bounce back, but then you kind of saw the U.S. session hover around those lows as well. Val, give me a little bit of a gut check here. Is that where we're set up for?
Look, European futures are looking positive. This is even though U.S. equity market ended in the red yesterday, we're still seeing European equities outperform just slightly this week. Euro Stoxx 50 futures up nearly 0.4%. The FTSE 100 also in the green, as well as the DAX. Ollie, is it going to be some of these earnings powering these indices higher?
Yeah, absolutely. You have to look at the once largest company in Europe, Novo Nordisk, is something that's going to be in full attention here. We got their numbers out a little bit earlier today. They had a miss in terms of their Ozempic sales, the all-important Ozempic sales. Wegovy coming broadly in line with estimates, but revenue, missing expectations by about 2%. And those two drugs account for about 2/3 of their revenue. The chip sector is, as ever, in focus in terms of the mixed bag that we've been seeing from the chips and the AI trade. Of course, there is this question of the China squeeze. We've been talking about it in the AMD earnings overnight. And, of course, the bank stocks. No bad news from Commerzbank's earnings. It's a buyback story, beat on almost all these sort of indexes. I mean, with my luck, though, it'll trade lower for some reason or another this morning, Kriti.
Yeah, don't jinx it. I'm sure it'll do just fine. ABN AMRO is another one that we've got our eye on when it comes to the banking sector as well. But from a sectoral perspective, it's not just the DAX that we've got our eye on. It's not just the CAC-ROP, for example. It's also the Swiss index. Is the index going to be responding to the fact that the Swiss president is over in the States? We are minutes away from finding out. And that does it for the opening trade. We are going to open these markets. The FTSE 100, marginal bias to the upside here. But remember, the futures picture was suggesting somewhere up to 0.4 to 0.5% of gains. Not seeing that kind of straight out momentum just seconds after the open that we traditionally do. A similar story for the Stoxx 600. So I wonder if some of those positive earnings stories really bubble up to the top. At the end of the day, though, it is the CAC-ROP and the DAX that have the most earnings exposure this morning. Specifically, the DAX. Ollie there was mentioning Commerzbank. We have Siemens Energy as well. We, of course, have ABN AMRO in other parts of Europe as well. The IBEX and the CAC-ROP, there we go. There's that optimism that we were waiting for. The FTSE 100 also outperforming the Stoxx 600 at the moment. Let's see how it all shakes out, Val.
Just looking at the sectors, Kriti, and in the first moments of opening trade, we only have one in the red, the rest in the green. At the moment, 461 stocks in the Euro Stoxx 600 are in the green so far this morning, so fairly positive and fairly broad-based. When it does come to the sectors, energy is at the top of the basket today. Some of that led by actually the, it looks like the the alternative energy space, so Vestas Wind Systems and BP dragging that basket up. We also see industrial goods, banks also outperforming as a sector. I'm keeping an eye out for Commerzbank. I don't see that share price open yet. Ollie, do you see it?
Yeah, I see it. We're actually down a hair on Commerzbank, so as predicted, I got that completely wrong. Yeah, I mean, it's interesting, actually, because you said that both the banking and renewable energy are bid up. Both this morning, Siemens Energy and Commerzbank are down ever so slightly. We should say a third of 1% over at Commerzbank and about half of a percentage, a third of 1%, call it, at Siemens Energy. And Novo Nordisk did actually open the session a little bit higher, now down, you know, about 1.5% here, or half of a percentage point. So kind of going against some of the things that we've been talking about this morning in terms of what we saw from the earnings figures.
Yeah, Glencore also one of those negative stocks, down over 2%, now 2.6%. They did come out with earnings this morning, or broadly in line, but I think investors were looking for an update on just where those cost-cutting measures are going to be hit, those cost-cutting measures that they announced last week. Maybe that uncertainty there is dragging the stock in the red, now down nearly 3%, Kriti.
Yeah, it's a fascinating one as well. Let's just add a little bit more positivity to this. So focusing on the doomsday here. Novartis is one that's taking a little bit of a hit, down about 0.8%. The Swiss market has just opened and is the notable underperformer this morning. I imagine the pharmaceutical piece is one of them. Now that we've talked about those potential threats from Donald Trump on a sectoral basis, so you see the likes of Novartis and some of the other pharma companies lower in today's trade. But from a sector, or excuse me, from an index perspective, the Swiss market is flat among a sea of positivity.
All right, let's take these big questions to our guests. Joining us around the table now is Daniel Murray, the Deputy CIO and Global Head of Research at EFG Asset Management. Thanks for joining us this morning. Welcome to the show. What have you made of earnings season so far? It does seem to be fairly positive and above expectations. Do you share that sentiment?
Yeah, absolutely. And, you know, I think in particular earnings have been very strong in the US. We've seen about 80% of companies beat earnings so far, which is an unusually high percentage. Also, there have been some strong sector messages there. So, you know, tech's done pretty well, financials also done pretty well, and some other sectors, you know, haven't outperformed by so much. I think we've seen, you know, across Europe, some companies are obviously feeling the effects of tariffs and the uncertainty that goes with that. So it's been a less clear-cut message in Europe, and obviously that's been reflected in relative market performance.
Yeah, it does seem to be like in some way the AI trade is really powering the equity market forward, even though there are these overarching concerns about how tariffs will affect businesses. What do you think about the tariff story here? Do you think all of it is done and dusted? It's in the rearview mirror. We're now just concerned about the economic effect. Or are you still keeping an eye on these sectoral tariffs? Do you think they'll be meaningful?
Look, absolutely keeping an eye on it, not least because we don't yet know what the outcome is going to be. And so I think it's going to be potentially an important market driver. But I think at the same time, we have to recognise that Trump's policies are not just about tariffs. Mm-hmm. Tariffs grab the headlines, but of course he's doing lots of other stuff as well. So, you know, it's interesting to note, for example, that there's, you know, a rough offset from tariffs, you know, due to the oil price. So a weaker oil price tends to lower inflation and tends to provide a tailwind to growth. And that sort of works in the opposite direction to tariffs. So tariffs grab the headlines, but there's also some offsets there. And I suspect that's why markets have been relatively resilient despite all the tariff noise.
Yeah, so tariff has, of course, been sort of the animating theme. It's hard to trade very specifically, but again, we have a number of different deadlines that maybe bring some specificity to when we'll actually get. So in the next 24 hours, it's going to be about India. On Friday, we talked about sectoral sanctions on Russia, or on people who buy crude oil from Russia. Then we have a new Fed governor, potentially. There's another Trump deadline. And then the pharma chip tariffs. And then, of course, there is the still ongoing trade war with China and the United States that's on pause until next week. For you, when you look at all of those sort of deadlines coming up in the next week, what is the most significant?
That's a really good question. I think that we won't know until we know actually what the outcome is going to be. So I think if, for example, there's a much larger than expected tariff on the pharma industry, then clearly that's going to be a major market driver. If that tariff actually starts out very low and then there's a threat of higher tariffs later down the line, I suspect that'll be a positive. So I think we're just going to have to wait and see where the surprises are in terms of that news flow. And we know with Mr. Trump, you know, he does like to surprise markets. So.
And indeed, and one of the surprises I think that maybe is underpriced at the moment, I'd like to get your perspective on that, is the question of sectoral, or I should say, secondary tariffs on people who buy crude oil from Russia. This is something that we've kind of priced out, but if that were to happen, that could have a massive impact on the market. Where do you see that in terms of the risk of that and what it could do for energy markets?
Well, clearly India is the main market where that's been impactful. And, you know, India has obviously been one of the major buyers of Russian oil. So I think it would be quite country-specific. Obviously, you know, for most parts of the developed world, we haven't really seen any purchases of Russian oil. In fact, markets have been trying to diversify away from Russian oil, and we know that as part of the trade deals, US has encouraged countries to buy more energy from the US. So I think it's going to be quite country-specific, with, in particular, India being negatively affected.
Daniel, if I was the CFO and I had all this tariff volatility to navigate, I'd be issuing more debt. I'd be building up my cash reserves. I'd be really adding on to my liquidity, whether that looks like divestments or et cetera. Is that the trick to outperforming in this market where there is so much trade uncertainty, where there is so much fund flow uncertainty, that liquidity is your best friend?
Look, I think there's a few things that are going on here. So one is you've got a certain group of companies that are benefiting from this strong structural AI trend, and I think that's something that's happening independently of tariffs. I think it's also notable that, despite this sort of slightly soggy ISM number yesterday, actually the underlying fundamentals in the US have held up relatively well. And that's, despite this tariff noise and all the other cross currents that are resulting from the Trump administration. So I think companies that have got strong structural growth, companies that actually will be able to weather the tariff storm, I think, are the ones that are likely to benefit in this sort of environment. I think that, the debt story is interesting. Obviously, with interest rates having gone up by so much over the past few years, the rates at which you can issue debt are much higher. So despite the fact that spreads are pretty tight, actually it's much more expensive at the moment.
Did last Friday's payroll revisions change your outlook on how the U.S. economy is going to handle these tariffs? I'm surprised that we haven't heard more. I mean, I know it's August and many people are on holiday, but no one's really changed their big calls for GDP growth the rest of the year. How are you thinking about those revisions?
So look, I think there's a couple of points to note. So obviously this data is prone to revisions, as we've seen, and it also jumps about from 1 month to the next, just because that's the usual volatility that you see in economic statistics. So I wouldn't take 1 month's data as indicative of a trend. But it does, nonetheless, in conjunction with things like the underlying components of PMI data, it does suggest that there is some marginal softening in the labour market. And of course, this is something that the Fed was trying to achieve, a sort of rebalancing in the US labour market. So I don't think it's necessarily a terrible thing. I think at the same time, when you look at other statistics, such as the weekly initial jobless claims, then that's suggesting that actually the underlying strength in the US labour market remains relatively robust. So I'm not panicking yet, but I would say that we've sort of moved from completely green to a little bit amber, and certainly monitoring the labour market data much more closely.
Yeah, it doesn't seem, as in Powell's words, that the labour market is as solid as he, I guess, tried to convince the markets it was before this payroll print. But more broadly on the U.S. economy, if you're thinking about the risk of stagflation, which I think is a long ball shot, right? If you have economic growth declining, it's highly unlikely you're going to get inflation. Do you share that kind of view, or do you think tariffs change the name of the game when it comes to CPI?
No, I think that's right. I think stagflation is unlikely if you get an environment where you get slowing domestic growth, and particularly if you get rising unemployment and a slightly soggier labour market. I think the sort of environment where typically you would get stagflation is one where you get a very large external shock. So now, tariffs arguably could be such a shock, but it looks like they're going to be much less of an impact than we would have thought at the beginning. As I said, there's some offset there from the oil price. Possibly there's some other shocks. Possibly there's a knock-on effect from Russian oil tariffs. But I think usually there's something that comes that's unexpected that causes that combination of slowing growth and rising inflation. And there isn't anything yet in the works that I think would trigger that.
And bringing it back to Europe, how do you trade the German stimulus story? And critically, when do you expect that to actually start hitting the P&L for a lot of these companies?
Yeah, I think the story is a really positive one, I think, not just for Germany, but for Europe as a whole. The problem is that, with European bureaucracy being what it is, it's just going to take a long time to feed through. So I think the earliest you're really going to see the benefit is next year. So, markets obviously got rightly very excited about the stimulus story, really from the fourth quarter of last year. And now it's sort of, a question of, show me the money. And we just haven't seen that yet.
Wait and see.
Yeah.
Europeans dragging their feet. Not a new thing.
Not anything, but perhaps one that's less priced in. Daniel Murray, Deputy CIO and Global Head of Research over at EFG Asset Management, joining us this morning with his views. Let's get a quick check on the core six, the heavyweights, of course, that tend to move this market. My eye immediately goes to Novo Nordisk, given the earnings that we had this morning, down about 0.5% there. But the underperformer, at least of the core six, is actually Ferrari, only down about 0.6%. But perhaps that's because it was the outperformer yesterday. So just a little bit of rotation. The rest, Nestle, ASML, kind of a nothing burger this morning.
I think we were spoiled yesterday for moves in the market today.
I know,
we're a little
and now
bit disappointing despite some very interesting earnings.
I know.
We do have Glencore dragging down a lot of the FTSE this morning, down over 3%. So, hey,
there's that optimism from Valerie Tytel.
Let's
Let's get a check on some of the individual stocks on the move. Louise Moon, how's that for us? Louise.
Hi, Kriti. So the first one we're looking at is ABN AMRO Bank. This morning had their results down almost 7% despite issuing quite a big share buyback and also beating expectations this morning, but dropping down into the red. Next up, we're looking at Glencore, obviously listed in the UK, big miner. They said they're not planning to shift their primary listing to New York. So you would have thought this would be, again, a positive for the market, but down at the moment, over 3.3%, just around that level. So we'll have to see if that moves any higher through the rest of the morning. Moving on to Beiersdorf, this makes personal care products, so the likes of Eucerin and other products like that, down over 7% this morning. That's after their earnings didn't seem to impress markets too much. And then finally, moving on to Legal & General this morning, profits up about 6%, but also in the red, down almost about 3% this morning. This is as there's kind of more work to be done with their turnaround under their CEO, who's been in place for just over a year now.
Louise Moon from our equities team, thank you so much. Coming up, Novo Nordisk sales show the weakest growth in 4 years. More on why the Danish drug maker is losing ground next. This is Bloomberg.
Welcome back to the opening trade. About 15 minutes into today's session, seeing green on screen across the board everywhere except for Switzerland. No surprise when it comes to the threat of that 39% tariff rate. The Swiss president, of course, speaking to Marco Rubio in Washington today. We'll see if that yields anything. In the meantime, the rest of these markets are throwing a little bit of a party. I want to kind of quick check on the pharmaceutical sector, though, because that's another area that's under threat when it comes to the tariff story. Two in particular catching our attention this morning. Bayer seeing some pain to the tune of about 3.5% after their earnings, and Novartis as well, down about 1.4%. A double whammy there when it comes to the pharmaceutical threat from Donald Trump, but also, of course, the fact that they are a Swiss company at the end of the day. Let's go to perhaps the largest pharmaceutical stock in Europe. Novo Nordisk sales showing the weakest growth in 4 years. This is a company loses ground to rising competition in U.S. markets for obesity drugs. Bloomberg's Copenhagen reporter Sanna Was joins us this morning. Sanna, just walk us through the results. What do we need to know about these numbers?
Well, what you need to know is that Novo is facing a lot of challenges, especially in the U.S., which is its biggest market. It's having to battle with compounding pharmacies, producing copycat versions of its drug, and of course, also intensifying competition from rival Eli Lilly. But Novo already last week went out and guided for lower profit and sales growth this year. So the numbers today were not a massive surprise. Already last week, shares tanked on that news. In fact, Novo lost almost $100 billion in market value in just a few days. So you can say Novo's shares have probably taken the worst of the hit, and that's probably also why we're seeing shares trading rather flat today.
Talk to us also about this new CEO that they've hired to get the company back on track. When does he sit down in this seat, and how does he intend on turning this story around for Novo Nordisk?
Yes, Marcia Mike Duster is his name. He's a company insider, has been with Novo for more than 30 years. And as you say, he is tasked with getting the company back on track. He only officially takes on the role as CEO tomorrow. So it's been the outgoing CEO, Lars Gård Jørgensen, who's presented the earnings today. So from tomorrow onwards, definitely the market will be following Mr. Doostar's next moves. He's already hinted at cost reductions, job cuts, said that Novo needs to execute faster. But the details of the plan, we will only really probably find out more about from tomorrow onwards.
All right, thank you. That was Sanne Vass joining us from Copenhagen on those Novo Nordisk results. And don't miss our conversation with the Novo Nordisk CFO. That's at 9:20 a.m. UK time. Ollie.
Well, let's take it to renewable energy. Siemens Energy shares ever so slightly lower this morning after the German industrial firm said it expects to reach the upper end of its full-year guidance on the back of surging orders in the United States. We spoke with the chief financial officer after the results. She shrugged off a €100 million hit from tariffs on strong demand from its gas turbines and grid equipment amid a boom in global electricity demand.
But what we do know is, of course, we've indicated that we see around 100 million so far. This has impacted our figures, and that's fully embedded. Of course, with the agreement with Europe, we see an additional 5%. That also we see it perhaps around the mid-double-digit mark in terms of impact for us for the rest of the fiscal year. But Lizzie, that's taken fully into consideration for our guidance. And with that, still with that impact, we see ourselves at the upper end of our guidance range.
The Siemens Energy CFO, Maria Ferraro. I mean, listen, the shares are down about 1 percentage point today, but we should bring into focus the fact that this is a stock that has rallied 300% or somewhat from the lows that they hit not too long ago. You can see their year-to-date up 92%. I mean, they had extreme problems with Gamesa, their purchases of the wind turbine business there. That is what really created a base effect for them to gain a lot. But still, this is a very bullish story here in Germany, particularly with all of that stimulus and spending that the German government's going to put
and
forward.
you can really attach the energy story to the AI demand to keep up with this data center usage. It does seem like that this AI trade is morphing just out of tech companies and into the energy space. We've seen a lot of consolidation in the U.S. when it comes to some of these big energy names buying nuclear reactors specifically to help these tech data centers power on.
Well, that's something we've seen in the likes of Schneider Electric as one great example. It's why Guy put it in that core 6 anyway, because it's really indicative of that AI trade. Let's talk about another major earnings story that may be juicier when it comes to its listing. Glencore scrapping plans to move its primary listing away from London. They're reviewing a potential move to New York. It announced the decision as it reported a fall in its first half profit as the commodity giant continues to be weighed down by weak prices for some of its most important products. I want to talk to Alan Olsha, Bloomberg Intelligence senior analyst for metals and mining, that joins us around the table. We'll get to the earnings in a moment, but walk us through why they're saying that moving their listing is not accretive anymore.
Well, it was always going to be a pretty tough case to make, moving the listing, but the temptation was there. I mean, it was really born out of the frustration management had with the coal portfolio, the coal-heavy portfolio that they have, not being appreciated by more ESG-minded European investors. The US investors tend to be less ESG-focused, particularly in the current climate. There are publicly listed coal companies there already. So the thinking was it could potentially drive a re-rating. But the move was always fraught with risk. Firstly, significant friction costs moving a listing. But more importantly, was indexation. There was no guarantee that Glencore would leave the FTSE and then enter one of the big US indices. So it could end up actually harming the valuation instead of benefiting it.
The other highlight from the Glencore earnings is the fact that we haven't necessarily seen any clarity on where this $1 billion of cost cutting is coming from. They announced this last week. It coincided with them raising their long-term profit forecast. But what do you think could be the winners and losers in terms of them cutting costs?
Yeah, well, they've mentioned a few things, but you're right. They haven't been completely clear. There will be some staff reductions. They have consolidated the nickel and zinc units into one unit. And there will be a lot of pressure on them to deliver these cost savings in the second half because this was a pretty weak first half. It's the weakest first half they've posted in 5 years. So there's a lot resting on the second half of the year. They need to ramp up copper output in particular pretty aggressively and reduce costs there, and they need to deliver these cost savings to satisfy the market.
And how much is resting on the geopolitics, the tariffs, the trade war, and trying to figure out kind of what to expect from Glencore in the coming months and actually what's driving the prices of these commodities?
So the trade war is a bit of a double-edged sword. On the one hand, it's disrupting trade flows, which for Glencore can be an advantage. Just the disruption of trade flows and the increase in volatility in commodity prices is very beneficial to its trading arm, its marketing business, which is the unit that really differentiates it from peers. Now, we haven't really seen that manifest in first half results yet, but there is a possibility that as we move into the second half, if those dislocations persist or become more acute, that they could actually take advantage of it.
Talk to us a little bit about the China impact here. I mean, 6 months ago, we were around this table talking about how the Chinese market doesn't have the fiscal stimulus is the only thing backing the Chinese market. You have a major housing crisis, a slowing consumer, although growing, but slowing in terms of their spending ability, and all of that being reflected when it comes to copper prices in particular. And we saw Glencore very reactive to that narrative. What happened to the China impact when it comes to Glencore?
China is the key consumer for all the commodities that these big mining companies produce. They, unfortunately, for the companies, have disappointed in terms of the stimulus that they've been willing to push into the economy. It's been kind of largely a drip feed approach that hasn't really changed. And particularly in the face of this U.S. tariff onslaught, which has hurt exports and has had a knock-on effect on domestic production, it's really kept a lot of these metal prices back, kept them from rallying. But copper has been relatively resilient, and copper is a key commodity for Glencore. It generates about a third of its profit. But there are lingering concerns that in the second half of the year, without significant stimulus from China and with global trade headwinds, that the copper price could potentially pull back a little bit. And if you combine that with what's happening in the rest of the commodity complex, with price inertia setting in, it's not good for the earnings story for a lot of these mining companies.
Thank you for joining us this morning. That was Alan Osha, Bloomberg Intelligence Senior Analyst for Metals and Mining, on the miss on Glencore earnings. Thank you.
Yeah, I mean, looking through these sort of earnings stories this morning, going back to, so we've seen some sort of moves in what we saw. Commerzbank is finally trading in the green again, talking my book here a little bit up almost 1 percentage point after what I thought was quite unambiguously bullish figures, but the market seemed to have taken with a bit of indifference. A different story there for Bayer, which is the big loser now on the Stocks 50, the biggest loser of the day, down almost 4%. We should say, Glencore, we were just talking about, down about 3.5% this morning after they released the earnings.
Yeah, I know we just discussed pharma, but we should also talk about Swiss pharma as well. Novartis being the worst drag on the on the Eurostoxx 600 index this morning. So clearly those extra threats from Donald Trump about these pharma tariffs going all the way up to possibly 250% is seeming to rattle Swiss pharma this morning.
Moving Swiss pharma, you're seeing that underperformance show up in the benchmark index as well. Chip stocks or chip exposed stocks feeling a little less heat, which is interesting because in that pharmaceutical story, he very much mentioned chips as well. ASML at the moment is flat, and I'm sure Infineon is not exactly rallying with the rest of the market. Coming up is going to be a focus on the banking sector. Jackie Anecki, CIO of Spring Investments, joins the program. This is Bloomberg.
This is the opening trade. We are 30 minutes into today's session. What do we see on the screen? It is a green day overall for the markets here in Europe. The Eurostoxx 600 up 1/3 of 1 percentage point. The DAX really the outperformer here, up about 2/3 of a percent. The CAC also catching a bid here, 0.5% up, and the FTSE also about 1/5 of a percent. I think the one that is missing on the board today is probably the Swiss index, as the president of Switzerland is in sort of dire shape. They're heading to the United States, to Washington, D.C., to try to negotiate with Donald Trump, only getting a meeting with Marco Rubio. Kriti.
You can see that index is flat at the moment. When it comes to how the rest of the market is performing, I mean, from that index perspective, it looks like green on the screen. It looks like a party. But take a look at this. The volume versus the 100-day average is down about 22%. It is, at the end of the day, a summer Wednesday, we'll call it, an August Wednesday. And that really does mean that ultimately on autopilot, a lot of stocks are going to be moving to the upside, 449 in the green. When you look underneath the hood, a couple of them hitting a 52-week high as well. I want to start with what's on the left side of this board. The Hiscox story, a UK insurer at the end of the day, moving markets higher by about 8.5%. Wholesome, one of Anna's concrete favorites, trading higher by about 2.7% as well. And then one eye on Deutsche Bank, and this is one's going to be interesting. We've got some news, at least when it comes to the spending story out of Germany. They seem to be doing the lifting when it comes to some other German stocks that are under pressure. Deutsche Bank kind of moving the entire average up higher by about 1.7%. There is one German stock that is in the lows at the moment. It's a German personal products maker, down about 9.4%, hitting a 52-week low, Val.
Well, here's what else you need to know this morning. President Donald Trump is warning that he plans to impose increased tariffs on countries buying energy from Russia. He's also clarified that expected levies on semiconductor and pharmaceutical imports will be announced within, quote, the next week or so. Russia is said to be weighing options on a concession to the U.S. president that would include an air truce with Ukraine. U.S. envoy Steve Witkoff is in Moscow for talks following Donald Trump's threat of secondary sanctions. And Germany is preparing to launch a €100 billion investment fund to help secure strategic sectors like defense, energy, and critical raw minerals. The new flagship fund is part of efforts by Chancellor Friedrich Merz's administration to revive growth in Europe's biggest economy after 2 years of contraction. Kriti?
It's a fascinating one as we have one eye on Germany. I mean, it's fascinating to me, at least, that the German index is actually the outperformer right now, despite the fact that we talked about weakness in Siemens Energy. We talked about weakness in some of the other German makers. The 52-week low at the end of the day is a German company as well.
Yeah, I think with a lot of these German companies, though, coming into these earning numbers, you know, they are very sort of well priced. Commerzbank has rallied massively. Siemens Energy, we talked about, up 300%. But now we're seeing further into the session, we have session highs here on Commerzbank up 1 1/3 percentage points. So, you know, we're kind of getting a little bit of that bid that we were sort of anticipating coming into this session.
All right. August seems like a positive one for European equities. Shall we take away with that?
Let's take it away with that. Ollie took us nicely to the Commerzbank story. That is one of the, I would say, success stories of the German market this morning. Those shares higher by about 1.4%. The German bank posting an earnings beat and saying it plans a €1 billion buyback. That is its biggest yet. We spoke to the CEO, Bettina Orlopp, as well as a few of her peers in Europe about the outlook when it comes to M&A. Take a listen.
We have very clear targets out there, a return on tangible equity of 15% up to 2028, and also a 50% cost-income ratio. So we need to be cautious. Whatever we do as acquisition needs to help us on this path.
Shrinking is not an option. UBS and Switzerland benefits from our diversification.
We look where it makes sense for things that give us scale, things that give us capability, but at the right price and with the right ability to manage and integrate.
So we are having some anecdotal evidence that some companies, particularly large companies, are delaying their investment programs. But overall, the macro backdrop remains very, very strong.
Broadly, M&A will increase as there is more stability in the macro environment. Of course, each company, each bank, each situation is very different. New technology will only facilitate that and, in fact, increase the returns to scale.
Lots going on in the M&A space, or at least some of the European banking CEOs want there to be. Let's see if it actually comes to fruition. Jackie Ineki, Chief Investment Officer over at Spring Investments, who, of course, is, I think, one of our favorite experts when it comes to the sector, joins the program. Jackie, a pleasure to have you this morning. Thank you for your time. I want to start off with an M&A story here. We've been asking every single, as you just heard, every single banking CEO that joins the program whether or not the M&A story can come to fruition as we see a massive wave of deregulation over in the States. How does Europe compete with that backdrop?
Honestly, I think we will see, good morning, first of all, thank you. I think we will see still a lot of M&A coming through Europe. You talk about deregulation in the US. I'm not sure we've seen a huge amount of that yet. Maybe it's coming, but I'm not sure the US banks actually want that, certainly the big ones. But in Europe, we are seeing areas where there's a little bit of softening of regulation, certainly in the UK. I'd say Metro Bank results this morning were great. And that's a bank that's going to really benefit from the, let's say, softening of regulations in MREL regulations in the UK. But I think more broadly, there is a push still in Europe for M&A. Banks are hugely overcapitalized. And bear in mind, I'm a credit analyst. I like banks to be overcapitalized. But at this stage, after 16 years of increasing regulations in Europe, they're overcapitalized. And I think they're going to use that capital, they're going to put it to work to buy smaller banks, to diversify away from dependency on interest income, like the ECB would like them to do. And it's a very quick way of right-sizing your capital by buying a smaller bank rather than drip-feeding share buybacks over the next 5-6 years.
Jackie, you said credit analyst, and Valerie Tytel immediately smiled, so I'm going to let her pick your brain in just a moment. Before we get to that, though, I want to ask you about that consolidation story, because we saw so much regional pushback in Italy and Spain as well. Something that the folks over in Brussels are really pushing back against. They're saying, look, you can't actually stop some of these deals. How much kind of pressure does that add to a positive consolidation story? Is that really moving the needle?
Yeah, I think it is. I mean, as you say, national governments don't have specific tools to stop mergers and acquisitions. So, but what you have, like if you take Commerzbank and UniCredit, of course, UniCredit has huge operations already in Germany, HVB. So they don't want to upset the German government in any case. So, you know, there is that pressure that the government can wield against such a merger like that. You know, you've got BBVA and Sabadell as well. Again, do you want to upset the domestic government of the country you're operating in? No. What I would say is that we really are expecting a lot smaller level mergers and acquisitions within countries. Very few cross-border, I think, still now. But there's still a lot of consolidation to go within countries of the larger banks and the much smaller banks. I think BBVA and Sabadell, they're two quite large banks, to be fair. If you look at the smaller names in Spain, in France, in Portugal as well, those kind of acquisitions are going through a lot easier. Also cross-border ones at the smaller level. And I think that's where we should focus. And certainly in terms of an investment opportunity, that's where it lies.
Jackie, you mentioned as being a credit analyst. I'll ask you about the credit quality of European banks. Do you think it has peaked? Really, can it get any stronger for Europe? And is it just a factor of the fact that they're keeping too much cash on their balance sheet and they're not putting it to work in M&A, as you mentioned?
Yeah, I mean, it's... has it peaked? I'm not sure. I mean, I'm sure it can get even better each quarter. You know, especially this morning, ABN and Commerzbank both beat on provisions. You know, Commerzbank, you know, you're seeing write-backs still there. So has it peaked? No, probably not. I think we've probably got still 2-3 more quarters of very strong asset quality. And even then, when it starts deteriorating, and it's always a lag, it's going to take, you know, years and years to start even getting a little bit weak. I think we're at such a strong level in asset quality. It's just not a question for European banks right now. You know, ask me again in 3 years and I might be a little bit concerned about it, but now not. And we've still got
and the tone overlays. The tone from management is still quite positive and upbeat on net interest income. What's your outlook on NII across Europe? Has it troughed yet?
I think it is troughing. I think what you saw from, I mean, almost everybody's actually reported now. I think that was the most conviction that we saw. It was the most surprising conviction we saw, I think, for the latest results season, that management were really quite you know, encouraging on net interest income, and even I think particularly the periphery countries gave a strong view that actually NII would trough earlier than what I think the market was expecting. I think the only kind of black spot there was in the Nordics. I think you saw about 2.5% drop in net interest income quarter on quarter. But generally, people are talking, or management are talking, pretty upbeat about NII troughing. And I think when you've got the loan growth coming through, you know, you've talked a lot about Germany this morning and what's happening there. But I think obviously growth in loans and that replicating portfolio really helps.
Yeah, and I want to talk about Germany because it's something that comes up often when I interview Deutsche Bank or Commerzbank a little bit earlier this morning. There's this sense that there's a huge amount of willingness to invest on the sidelines, a lot of hesitation around tariffs, but there is this massive initiative from the government. I think everybody's been sort of loath to give a sort of dollar or euro figure on what that means for the banks, but Deutsche Bank said that basically they'd hope to touch at least some fraction of every euro that is spent in Germany. How does that play into your thinking?
Yeah, it's absolutely positive on our thinking. I mean, Commerzbank is, I run an AT1 fund, and Commerzbank is one of the biggest positions that we have. It always trades a little bit cheap. It's still trading cheap to UniCredit, which I think makes very little sense. But yeah, looking at the loan growth going over the next 2 to 3 years, and for someone like Commerzbank, you have Poland as well, and you have the EU next gen funds coming in there as well. So I think someone like Commerzbank with, I think 40% of its loans are corporate and Mittelstand in Germany, that's going to be a huge beneficiary of what's going into the economy there.
Yeah, and then also just sort of broadly speaking on the sector, I mean, the banks are the best performer in terms of groups in Europe over the last 12 months. They're up 60%. What is the sort of threat to the sort of vertiginous rally, if there is any?
I can imagine there's a huge amount of threats to that vertiginous rally. I focus on credit, but obviously I'm seeing what's going on in equities. And obviously the European banks, after years and years of like a terrible performance in the stock markets, that they're doing great, clearly. From a banking perspective, it's hard to see what could push that over. I think it's going to probably be more macro data and probably not directly implicating the European banks themselves, but it'll be a risk-off situation. And this is exactly what we're worried about in AT1s as well. So the bond markets have really, really rallied. I think they've not quite as much as the equity markets, but certainly we're close to all-time tights in deeply subordinated debt of European banks. Now, it's hard to think what would push that over for European bank debt at the moment. I don't think it's going to be something specific to European banks. I think it's going to be something probably US-centric, I imagine. We just feel vulnerable here at these levels. But underlying credit quality is great. European bank debt is probably still one of the best areas to be in fixed income markets right now. It just feels a little bit vulnerable. And we're telling clients to keep a bit of powder dry for a potential correction in the next couple of months.
All right, Jackie Ineke, thank you for joining us this morning with your thoughts on the European banking space. That was Jackie Ineke, the CIO at Spring Investments. Thank you. Coming up, U.S. President Donald Trump says he's readying more tariffs on Russian energy buyers, including India. We'll get the latest next. This is Bloomberg.
Welcome back to the opening trade. We are seeing green on the screen everywhere except for Switzerland. I think that's really important because the underperformer of Europe is that market. And of course, this comes with the overshadow of tariff stories when it comes to sectoral rates on pharma and autos, but it also comes amid a meeting between the Swiss president and Marco Rubio at the moment. It didn't quite get that invitation from Donald Trump just yet. That's being very much reflected in these markets. Plenty to digest, though, when it comes to the actual earnings and data that we're going to get in the next 24 hours. Let me walk you through it here. 10 a.m. UK time, the Euro area retail sales is going to be hitting the wire, plus the 10-year auction at about 6 p.m. UK time as well. Is that U.S. exceptionalism story over? Is it going to show up in the bond market? 3 months ago, we were all worried about that. Maybe not today. Plus plenty of earnings. Uber, Airbnb, Disney as well. Very excited about their new shows and streaming and what they can announce there. And ultimately, Fed Speak, which I know has Valerie Tytel's special attention. Fed's Cook and Collins participating in that panel event. Plus Fed's Daily over in Anchorage. Lots going on there.
You make fun of me too much. But yes, excited about the Fed.
Are they going to change
their language on the labor market after all these massive revisions we got last week? That's what I'm keen to hear, and I think that's what the market is keen to hear, too. But we're also keen to hear from President Trump. He's been saying that levies on semiconductor and pharmaceutical imports will be announced within, quote, the next week or so. Joining us now to discuss this is Bloomberg's Bill Ferries. Bill, thanks for joining the show this morning. Another round of threats when it comes to these sectoral tariffs. Just when will we get these studies done on the Section 232 tariffs, and when will they be implemented?
Well, officially, they had 270 days to go ahead and work on those, and that would take us to much later in the year. But we know President Trump doesn't like to wait that long, and he's signaling now it could be, really imminent at this point. At some point in August, he'll have those studies on his desk, and he'll have an ability to move forward with additional tariffs on things like pharmaceuticals, semiconductors you mentioned. He's talked about pharmaceutical tariffs going up to 250% over time if needed. He said that the administration has signaled that those could start at a much lower level, giving the manufacturers time to adjust and move production facilities into the U.S., but a year or so from now, they could hit that peak. So that's what we're waiting for, along, of course, with that deadline of Thursday at 12:01 a.m., when that whole round of reciprocal tariffs is set to go into effect.
Can you just talk us through perhaps what those tariffs might actually look like? I mean, Donald Trump has talked about a pharma rate of something like 200%. Now he's talking about chips as well. What kind of numbers might be expected on that front?
Well, on the pharma side, he has talked about phasing that in to give people time. So, a lot of the pharmaceutical production is done in Europe, imported. It's hard to imagine the president wanting to suddenly slap 200% plus tariffs on people's everyday medicines that they need. For everything from basic illnesses to, potentially very life-threatening illnesses. So he's talked about phasing it in. We've seen on semiconductors, we've seen talks going from, the low 10% plus range up to 50, 100%. So it's a pretty wide range. It's not clear whether that would all come into effect right away at first, too. But what is clear is that he's got his reciprocal tariffs coming in 36 hours, and his tariff agenda is really not slowing down. He's moving on to the sectoral tariffs, and at the same time, you have countries like Switzerland rushing to Washington to try to talk some of those back down again.
And Bill, I think that when we look at kind of the process that we've seen here with Donald Trump and the tariff sort of saga that we've seen over the last couple of months, the big fear for corporates, the big fear for governments was that basically no number is ever final. Do you feel that we're making actual substantive progress here, or is this going to be just kind of the same story for the next 6 and 12 months, and that's going to make it very difficult situations for policymakers and obviously for companies?
I think that implementation of the reciprocal tariffs at 12:01 a.m. on Thursday in Washington, I think that's probably best seen as the end of the beginning of this tumultuous process of tariffs. That process that started in April on Liberation Day that really shook markets and has continued. That phase may be winding down a little bit, but I think a lot of countries are going to continue to look past August 7th, August 8th and say, there's still time for us to make a better deal with Washington. So even if Switzerland, for example, doesn't get that 39% rate reduced in the next 36 hours, they're going to keep pushing. They're going to look for deals. We know that Japan, India, a lot of other countries out there are still going to try to find ways to say, hey, if I invest a little bit more in the U.S. on this side, in this industry, could I get a cut in that tariff? Donald Trump is a deal maker. I think he's going to be willing to entertain all that. And we also know that when countries do things that he doesn't like, for instance, like Brazil going after former President Bolsonaro on charges of inciting a coup, Donald Trump uses tariffs as a tool for diplomacy on things totally unrelated to trade. So, yes, I think to answer your question, I think there's still going to be a lot of volatility going forward. And I think countries are going to try to use any advantage they can to talk those tariffs down.
Well, Bloomberg Senior Editor Bill Ferries, thank you so much for joining us. Bring us a little bit light to the heat of the tariff conversation. Let's move it along to the Swiss market here this morning. It was trading lower a little bit earlier in the day. I think that has turned around. See a positive print there for the SMI. And there you go, dollar Swissy dead flat this morning as the Swiss President Karin Keller-Sutter arrived in the United States yesterday to make a last-minute effort to improve that 39% tariff deal. Let's get first now to our Bloomberg Swiss economy government reporter, Bastien Benrath. Thanks so much, Bastien. What do we know about who she's actually got to meet? We understand Marco Rubio. Is she going to get a meeting with a trade representative, which is why she's there?
This is very unclear. That's the problem. We really only know about Rubio. This has been announced in his agenda by the State Department. However, as we obviously know, Rubio has not been involved in the trade negotiations. So it's kind of a useless meeting, to say it bluntly. We still don't know if she's going to meet the president, because this is what everything's, focusing on. There was a deal on the table before, which, when she then talked to the president, was off the table again. So her trip to Washington will definitely not have proved worthwhile unless she can see Donald Trump, and there is no indication so far that she will.
Bastian, talk to us about the potential concessions she can offer. I mean, some part of the issue and part of the kind of beef, basically, that Donald Trump has with Switzerland right now is that they have an S&P, a central bank, that's at zero at the moment from a rate perspective. They have actively intervened in their currency market, and they have massive pharmaceutical exposure. What more can she do to make things easier in those negotiations?
Yeah, that's a really great question, because Switzerland's trade balance is actually, Switzerland's trade surplus with the U.S. is actually very much inflated, not least because of Donald Trump, because we've seen in the first quarter, we've seen massive gold exports going from Switzerland, which is a gold refining hub, to the U.S. But that was really just shippers moving that bullion over because they feared that tariffs could be put on it. So the numbers which Donald Trump is looking at, and which he has complained to keller-sutter in their call last week, are very much tainted numbers, which are not reflecting the actual common situation. I think what she can offer, I think if we're seeing a deal, we will see a deal very much around investment or arms purchases, not really on anything which is going to change the trade balance, because it's not going to be able to be changed quickly. A possibility could be there is an F-35 fighter jet purchase in the works right now, and the Swiss could foster that, maybe symbolically buy 1 or 2 planes more, along with energy purchases. LNG has been named. So these things, I think, is what we're looking at if there is to be a deal in Washington.
All right, Bloomberg Swiss economy and government reporter Bastian Benrath there walking us through those dynamics between Switzerland and the United States. It's fascinating that he mentioned the defense piece of it, because this has been such a trademark pillar of all the trade deals he's negotiated. And I should mention, even with the tension with India as well, India doesn't buy most of its arms from the U.S. It buys its defense from Russia, which is another sticking point.
Yeah, and I think one of the sort of broader and longer-term stories on the defense story with the United States is there is increasing concern that people will not openly talk about within governments in Europe, that if the U.S. is an unreliable ally, all of these F-35s, all of this kit needs constant software updates, needs training, needs reliance on the United States. Longer term, is that something that they can, that they can live with? In the short term, though, everybody acknowledges there is no alternative.
All right, lots going on there. There's a pharmaceutical conversation, of course, on that Swiss story as well. We're going to get an early insight from, on that front, Novo Nordisk CFO will be joining the Pulse next. That does it for the opening trade. This is Bloomberg.